السلام عليكم ورحمة الله. Participants. Good afternoon, everybody. Can you hear us and see us?
عليكم السلام ورحمة الله وبركاته. نعم, yes, we can hear you and see you. Thank you very much.
شكرا جزاكم الله خير. نرحب فيكم في MSX Discussion Session, Annual Discussion Session MSX. جزاكم الله خير وشكرا. And if you allow us, we will go through a small presentation reflects 2025 highlights, the merger and its own results, and maybe few available information based on assumption, and inshallah we project to see in the nearest future. معي من الإدارة التنفيذية we have نائب الرئيس التنفيذي الأخوة رئيس العمليات ورئيس المالية ورئيس الاستثمار، والجمال اللي هو المسؤول عن التنظيم عن مجلس الإدارة. If you allow me, I will start with a few information about the company, an overview of the company, and we are talking about Dhufar Development and Investment Company. They started, mashallah, a long time back in 1987. That is prior to the last year merger with OFC. OFC also started quite longer than that, and now we have two entities, and I can proudly say that this is probably one of the big mergers if we exclude the banking sector recently, and we hope to see more consolidation in Omani market to have a stronger financially stability and futuristic solid companies. In fact, the focus of the group, practically both, even OFC were mainly recently in investment, and they have quite good diversifications. If we consider OFC was known as an operating, there is an operating unit, but recently we have focused only on fintech and the collection. And we have let go most of the utility like meter readings and disconnected reconnection. We still have a very small business out of the old contracts. We are major investors in large institutions like Bank Dhufar, like Bank Suhar, Dhufar Insurance, and DFI, and we consider two of them, Dhufar Insurance and Dhufar Food, as subsidiaries, and Suhar International Bank Dhufar as associates. We have 23.8% in Bank Dhufar and just 13% in Bank Suhar. We have also under the companies we own, whether subsidy or associates, we have other or more interest and probably involvement in many other activities. And we are in the financial sector, manufacturing, insurance, utility, hospitality, medical supplies, and of course in the fintech part. Major shareholders are in fact very well-known families in Oman, and we have a good portion of our own investment, of our own shares are under the pension funds and Oman Investment Authority. We have more than 2,000 shareholders. We have seen a very good share liquidity recently after the merger. The price have gone up. We'll share probably more data in the coming few slides. The result of this merger also brought not only the business opportunities and proper consolidation, it brought an excellent mix of board members. We have board members from different sectors, from the investment, businessmen, engineers, people with very good experience in banking, telecom, regulatory, and uh, government investment. That mix such excellent calibers gave the company different dimensions to see things beyond what we used to see in the past, and will definitely open and help and support the management to put more meaningful plans and also to hopefully create a good value for the shareholders. That's not to the shareholders, but again to the market, to the economy, and to people living in this country. The management after the merger also 35 people around, in fact, except Qais, who is the head of compliance, who is not in the room, but we are the five in the room. We have also a mix of good experience. I think the team now equipped with excellent power of authority and proper guidance from the board of directors about the future. We started immediately after the merger by looking to our own debts, reevaluating our own investments, and working on strategy plans to take this new entity into what it's supposed to be and to add value to the market, money market. If I want to, I can mention the names. We have Saud Siabi, who is heading the Rams, of course, the CEO. Saud Siabi, who is heading the operation. We have Vishal, who is heading the investment right now. Vikas, who is looking after the financials, finance department. And we have Face, who is not in the room. He's looking after the compliance and legal affairs. I'm also part of the team as a CEO. We are not going to stop here, but we may look into having more equipped management team, whether at middle management, senior management, or others, to line with the plans, with the approved strategy of the company. That would be, if there is any fundamental and important information, we'll actually share it to the market if there is. If you move to the story of the merger, the merger happened officially on the 1st of July 2025. It took quite a long time. That resulted a sort of change in relations with some of our own subsidiaries and some of our own associates. Some of our associates converted into subsidiaries due to common shareholding between the two companies before the merger. This is DIC and DFI. And we are now consolidating these two companies line by line into our own balance sheets, profit and loss, and list. The financials are result again. Today we don't have an apple to apple to compare year to year, because the merger happened in the 1st of July. So we have 6 months as a standalone, and we have 6 months as an entity. We'll share with you the numbers as closed in 2025. The group net profit was 19 million, and the total comprehensive income was 21.4. Share of profits from associates, mainly Bank Sahar and Bank Bufar, was close to 21.7 million. And the merger impact after the PPA exercise resulted 3 million gains. That's been considered and also in the closed financials of 2025. At the year end, the net worth was 160.7 million. The increase was 72, and this is the result of 72.6 million of share capital and 78.2 million retained earnings, and the share capital consequences, 72 and 78. The team did an excellent, very good work since the day we announced officially the merger, and they have coordinated our own financial sector, the banks. They have been so kind and so good in helping us to structure most of our own liabilities. Today we have worked on 130 million, not only from cost perspective, but from the repayment schedules and other terms and conditions, which give the company more flexibility now in utilizing our cash in a more better way to meet our own targets. That enable us to think seriously, whether at the management level or at the board level, to reward our own shareholders, and that the decision at the recommendation, in fact, the recommendation decision from the board to the AGM to give a 4 paisa per share in our meeting next week, the 16th of February. And we also propose, and the board as well propose, to have a partial bonds to the shareholders represent equivalent of 30 millions with the coupon rate that was announced, but both are still to be approved by AGMs and authorities. But the message behind is that we are committed to maximize the shareholders' benefits, to make DIDIC, hopefully, inshallah, a better company, an attractive company for investors in the future. Again, back to the comparison I mentioned before, we have 1st January till 30th of June, where 6 months each company was separately working with its own financials, and then after July. Again, as I mentioned before, there are quite a large number of subsidiaries now came under the mother company, and we have 9 subsidiaries and 7 associates. And we have gone through a very, very long purchase price allocation, and we just managed to close it a few days back, I would say a week or 10 days back. Is still under review for small aspects, but this I would say excellent assets. We would need to have a very very sensitive analysis and very deep studies to see which one will be taken to the future, which one would probably need to be consolidated with other businesses, which one would be looking for partners to help us with, and we are committed to make all of these subsidiaries and it works well up to our own abilities, whether financially or an impact in these organizations. If you go to financials, we have the 2 tables here represent the profit and loss to the left, and then balance sheet to the right, as on the 31st of December 2025. Once we look into the numbers, it is about, again, consolidation of DIC, the Far Insurance Company, and DFI, Far Food and Investment Company, into our own profit and loss. The revenue from operation, and it's mainly from the 2 companies, is 61.8 million. And if you divide, and then from the insurance is 41, investment finance and other income represent 12 million riyals. So the total income is 122. If you minus the expenses, we end up into an operating profit of 7.1. Finance cost was 11.5 or 11.6 million, and the share of profit from associate was about 21 million riyals. The net profit before tax, as you can see, was 19.24, and the total comprehensive profit was 21.436 million. Balance sheet, I think there is no position to compare to the last years, but what I can say is that we are now a company of an asset equivalent to about $1.4 billion, almost 570 million Oman riyals. This is quite a good substantial number in the Omani market for an asset in an investment arena, and we hope to make use of all of these investments in appropriate way that would generate sufficient safety and all security, from a security perspective and from a return perspective for the shareholders. This in fact represents the distribution of our own assets, and you can see the investment in associate is representing the largest number and this is in Bank Suhar and Bank Kufar plus others, TFI and financial assets about 101, and then cash or equivalent 63, fixed assets 45, and there are also receivables and others represent about 83 billion riyals. The profit from the associate Bank Far, and this is for 6 months, correct? Bank Far is full year. Bank Far is full year, 12 million, and Suhar is 6 months. OFC up to end of June. Far Insurance also from end of June, from June till June, yes. OFC and DFI also till June. Others is the normal shares we get from others. So next year we'll have the full year. We will consider or we'll appreciate the full year of profit from associates, and these numbers are going to be slightly different to this. The merger, people will ask, okay, what is the purpose of the merger and what are the benefits that would come out of that? Beside what we said that it was recommended, and two of them are repeated here. The total shares traded are 72.5 million. The capital appreciates 36%. But there is a recommendation to go for 10 basis cash, and there is also another recommendation to go for 30 million worth of proportional bonds with the coupon rate. So in fact, if you look at that as a total return, is quite substantially good. Hopefully that would be also seen better, and we hope also to make other moves that would make the price of the share still attractive. We will be also very keen to create as much benefits as we can for the shareholders. The future is quite good, challenging with the very recent geopolitical, economical probably impacts. But the plans is to keep expanding in the digital and finance technology operations, to establish an international investment portfolio, and that will probably explore other markets with a very, very careful and secured decisions. We have to go and go look into our own portfolio and try to reorganize it appropriately and do a proper diversification, and not to compromise also on values, and focus on specific probably sectors. And then definitely all of this would never happen without having appropriate people and appropriate resources, to whether from people or technology, to make sure that what we are looking at is done properly. And beside all of this, we have to also appreciate and respect all rules and regulations, and we promise that we'll keep our own self within the domain of governance that would require for the future. By this, I think we cover as much as I can. I hope I was clear. The floor is open for everybody to either ask or maybe anybody from the team to comment on what was presented. Here, I would like to thank the FSA and MCD and all regulators that helped us to make this such important merger. Probably people from outside will see it as a normal and an easy one, but it is very complicated. It is hopefully very, inshallah, meaningful for the market, for people, and for the investors. And also, I'd like to thank our shareholders for being so supportive to make this journey finally happen. And we hope to see 2026 and 2027 and onward much better from a result perspective. And we promise that we'll keep the market always up to date in any fundamental or material decision, action, or move that would happen within the company. Thank you very much. The door is open for question, gentlemen, if there is.
Assalamu alaikum. Thank you very much for the presentation, Ustad Saeed. I have a few questions on the accounts because
إذا تعرفنا بنفسك بس الله
نعم
يخليك
نعم
إذا.
معك علي أحد المساهمين. I'm one of the shareholders. My name is Ali.
نعم علي، أهلا وسهلا بك، الله
نعم
يسلمك.
الله يسلمك الله يخليك. First of all, thank you very much, and we are very pleased to see the performance and after the merger kind of results. Alhamdulillah. So just a few things that will attracted my attention when I was going through the financials. There is quite substantial treasury shares that you guys have, as a result of the merger, because OIFC and the far feed and all of that. So is there any plan for this treasury shares that you guys have on your balance sheet? It's quite substantial, maybe, talking about not less than 15% of your share capital.
يعطيك العافية علي. Allow me just to clarify. If you will note in the financials, the treasury share deduction from capital is different between parent and group. You're absolutely right. When we merged with OIFC, we held about 38% of OIFC at that point of time, and as a result, BIDIC was granted shares in itself on the merger because of the share swap. That comes up to about 7%. The balance that appears under the group, these are the investments made into DIDIC shares by DFI and DIC. So while for financial reporting purposes, they are presented as treasury shares in consolidation, the truth is they are not actually treasury shares. These are shares freely held by these subsidiaries that they can trade anytime. The actual treasury shares held are the shares held by DIDIC in itself as a result of the merger, which amount to close to 7% of share capital. Just to clarify on that. As far as any specific plans with respect to treasury, we haven't developed any specific plans. I mean, obviously, treasury shares, there are multiple uses for which they can be used. However, for the time being, we're happy for them to be there. We will obviously have to announce should we have any use for those, whether we decide to sell them in open market or whether we decide to use them as currency in certain corporate action. That is yet to be decided based on the opportunities that present themselves to us down the line.
Thank you, Ustad Ramiz. It's clear, yes, I can see that from the parent. The only reason why I brought it up is that it's quite substantial, whether it's 9%, 10% of the capital, so it reduces the, free float available in the market, Anyway, so thanks for your answer. The other thing what attracted my attention is the loan given to a subsidiaries. It's about 20 million. I think it's given to your energy company. May we know more information about that? It's quite substantial loan given to a subsidiary,
it's actually yes.
So as it is, DIDIC has quite a substantial loan portfolio. It risen up from 77 million to almost 200 million, as a parent company. That would be my other question about your plan for deleveraging your balance sheet. However, may we know more about this loan given to your subsidiary of 20 million or total 20? It was less, but I think last year it went to 20 million.
I'll just give you the background to this. We invest in certain power companies in Oman. We have investments in 3 power companies and a desalination plant. We are minority investors in all of these. The DIAS, the Dhofar International Energy Services, is a special purpose vehicle established to invest in those entities. However, obviously, the funding to invest was provided by DIDIC. So the DIAS is simply a vehicle. So whatever money that DIDIC used to invest in those entities that was routed through DIAS is effectively a shareholder loan given to a subsidiary. But the investments it's a fully owned subsidiary. So while it appears as a loan to subsidiary in the financials, it's actually just simply a funding method to allow us to fund those. One thing that was done throughout the year as well is that subsidiary itself had a loan on its books that was actually refinanced when we did the refinancing post-merger. We refinanced all of the debt at DIDIC level for sure, long-term debt, and that included the debt held by that subsidiary, which was refinanced at the DIDIC level. And so the repayment of that debt that took place also added to that liability account. But the reality is this is not an interest bearing, it's not an outside liability, it's simply the way the funding was provided internally. And that is something that we regularly visit as we assess the status of that subsidiary. So I mean, just to clarify on that. As far as our debt is concerned, obviously the expansion in the debt that took place did not arise as a result of any additional borrowing that was taken over the year. The additional borrowing came through the consolidation or the merger with YFC. Obviously, YFC had its own debt on its books, and so once we merged, all of the debt came into DIDIC's books, and that is the background to the expansion of the debt. With respect to deleveraging, through the refinancing that was done for this long-term facility, we have secured much more favorable terms than either company enjoyed in the past. So those terms include a certain holiday in terms of repayments, so there's a moratorium on repayments for the coming 2 years. We have a lower interest rate that obviously allows us to generate the surplus. That's how we're able to distribute a dividend and issue this bond. While the leveraging will happen in due course as the repayments kick in, starting in 2029 or towards the tail end of 28, there is a repayment schedule attached to that. And so long as our investments continue to perform the way they're performing, we don't feel that this debt level presents any significant risk for us at the moment. So, however, moving forward, should we get any kind of cash windfall from an exit or something like that, we would certainly be assessing whether it makes more sense to pay down some debt or redeploy or distribute as any investment company would do.
Also, the average between the debts and the assets is substantially good. We are still in good position. We may consider probably either to, as Ram said, if we liquidate something, to look into either to settle or probably to borrow more and make better investments. This is a decision that will be looked at very, very carefully, but it's quite a big borrowing, but managed carefully, and the margins between the margin till now, and hopefully to be even better between the investment and the borrowing is in our favor. So there is no pressure from banks, neither from business or from the margins to force us to liquid any important and excellent investment. By the way, most of these debts are a result of either right issues or purchase in this large institution. So it's not anything beside what you mentioned before. Even the investment in power stations was once upon a time an opportunity, but unfortunately for other things that outside our own control between takers and the business, that was the result. But it's again fully owned by all of us, by all owned by our company, and there are no other partners where they are enjoying any benefits out of that. And the reason why it's a loan, not a direct borrow from the bank for the profit, for the interest that we would make probably under the DIC name. We are also considering this in the future, whether to start booking some, if required, provisions. And we are, of course, very clear, and our auditors are very much clear about these transactions and its own consequences.
Thanks for the clarification. So for this energy company, these are investments in power stations, or these are new
هذا
initiatives?
كان قرار، لا هذا قرار قديم ترى أخ علي، كان من فترة طويلة لما الحكومة طلبت من شركات دولية إنشاء محطات توليد طاقة. وبدأ كانت من ضمن المؤسسين بنسبة صغيرة ما تتجاوز 5-6%، 5% تقريبا في كل مؤسسة، بس كانوا المشاريع هذه ضخمة. واحدة منهم ظفار للطاقة، والشركة ظفار للطاقة شركة مساهمة عامة وتعمل أرباح بسيطة، بس بسبب شرط المدينين ما قادرة تعمل توزيعات، وأعتقد وضعنا فيها جيد. نزلت 40% الكتاب العام قبل كم من سنة. لا قصتنا نزلت شوي، يمكن الحين واصلين على الحين واصلين 6، الحين 6%، البقية 5%، والشركات 10% الديسالينيشن. ايوه، و15% في التحلية. هذيل الشركات عندها بعض التحديات، سواء كانت من ناحية شراء طاقة والمياه، أو من ناحية أيضا يبدو ارباحها وخسائرها، ولكن نحن على يعني على وعي بالتعامل مع هذا الامر، وان شاء الله تعالى ما راح ياثر على ابدا على ارقام الشركه في المستقبل باذن رب العالمين.
شكرا الله يسلمك. شكرا لأن things were a little bit not very clear, so thanks for the clarification. I very much appreciate it. شكرا.
في حد
I have
في شيء
one more
سريع ولا
question.
في
Sorry,
حد
I have one more
مضطر؟
question on the balance sheet. يا أخي, I saw something called financial assets in the minus on the asset side of 13 or 4 million. So it wasn't really clear what those meant. Non-financial assets, others in the minus. So it was a bit kind of unclear what those meant.
There is no matter. In the presentation ولا في الفاينانشالز يا اخي محمد؟
في الفاينانشال is the balance sheet.
Maybe
There is
he was talking probably about the bargain gains in associated
balance sheet there is no negative.
تقدر تشير لاي موضوع والله ما نتذكر الحين. سبحان الله السنه هذه تعرف we took a long time to deal with our auditors to close the accounts بسبب الconsolidation.
نعم.
But if there is anything that in specific, we are happy to answer you, and you can also even visit us to the office, and we can go line by line with you. أنت ولا أي حد من الأخوة. ما
الله
والله
يسلمك.
الله يسلمك. بس definitely it's not a coincidence. It's probably for a reason or another. أو نقل أو نقل أصل أو شيء أو نقل أو تصنيف. No. He's talking about a negative.
No, on the face of balance sheet there is nothing. There might be within the
in the notes.
in the note there might be adjustment.
Notes, or is it on the balance sheet?
On the balance sheet we cannot see any negative item against any
Yeah,
financial.
exactly. So that's like I'm looking at the balance sheet, which is disclosed of the stock market in your file. So basically, the assets, there is a minus thing called non-financial assets, others. It's just above the line, just above the total assets. So I was a bit kind of uncertain.
الفاليو معنى كبير.
بحكي على الاكس
It might be in this.
بحكي على الاكس بي ار ال.
XBR, yeah, so XBR is an adjustment.
طيب can we come back to you later or can you contact us to give you more
إن شاء الله بإذن
clarification?
الله.
You are more than welcome. أنت أحد من الأخوة.
الله يسلمك.
لأنه نحن it was to consolidate 9 subsidiaries, 7 associates.
حقيقة. نعم.
7 months, but it was taken يعني in a good way, and we meant to take our own time to have appropriate accounting to build on and have a proper comparison in the coming years, which will make the investor in a much better position to compare results, to compare apple to apple in the future.
Yeah, my apologies to ask some
we
technical
will-
questions there, but it's just for us to understand.
لا ابدا بالعكس. نحن this is the purpose اخي محمد اخي علي. The purpose of this meeting is to get our own shareholders and to ask what they cannot see, and this is an invitation from me personally and the team that any one of you would like to have more information, more data up to the disclosure barriers. We are happy to relax, to accommodate any questions or anything, whether you want to send us in writing or you want to come and visit. اهلا وسهلا بكم ان شاء الله.
الله يسلمك.
Then we have
I have one more question. Sorry, if you don't mind, and then I think I'll open the floor for the others. Is basically why the decision was made to give perpetual bonds as part of the dividends.
أخي علي بكون صادق معاك. It is the cash flow constraints for the time being.
Yes.
We don't want at any circumstances to go and borrow cash and give it as a dividend or other benefit to the shareholders. So we have a huge capital, mashallah, and we have an excellent يعني ما شاء الله compound return earnings. And we thought using this for our own shareholders as well to retain them. They can liquid if they want to sell in the market. They can enjoy the premium on the coupons if they want to enjoy the coupons. And للأمانة we would be much happy to give more in cash. لكن نحن أيضا ما نريد نوصل لمرحلة to be tight in cash flow. Hopefully the coming years will give us better position to consider this. But at least now we secure 30% of our own shareholders to enjoy some good perpetual bonds with appropriate and decent coupons and that according to the investment average in the Omani market. That is the main reason للأمانة.
Yeah, thank you.
يعني
I
احنا
really
انا
appreciate it.
نريد نعوض الشير هولدرز ماله بشيء،
ما
فافضل شيء
قصرتوا.
انه نحن شيء يعني
ما
يسوى
قصرتوا.
مرتين، يسوى في قيمته
نعم.
ويسوى في الكوبن مال.
الحقيقة. And so this will be perpetual. It will never be kind of redeemed or called off, is it?
It's the 5 years. It's 5 years. It's callable and بس اظن انه it is a good thing to start with، لان ايضا كان البريشر علينا كبير من السوق ومن المساهمين ان احنا to start at least يعني seeing our own people enjoying
So it is callable, أستاذي. It's 5 years callable, is it?
It's callable, yes.
Okay, because this is not clear in, I think, the disclosure.
لسه أخي علي، نحن ترى مثل ما
عفواً.
ذكرت سابقا they are
نعم.
still subject to approvals من
نعم.
الشير من الماركت، وان شاء الله لما نصدر نشرة الاصدار we'll share it with everybody to see the rest of the information very short.
نعم. Okay, one last question. Sorry أستاذ سعيد إذا تسمح لي. I was going through the notes as well. On page 81, I saw actually that the acquisition of OFC was a minus 3 million, not a plus 3 million as kind of was in the presentation. So this is really a little confusing me because like I'm going with the notes now at the moment.
هذه يمكن
نعم.
شفت الإعلان السابق.
Because in the notes, page 81.
أكالي أقول لك الصراحة، شوف ال PPA workings, the purchase price allocation workings are actually split into two components. It's not only a matter of bargain gain or goodwill arising on OFC itself. There is, because the reclassification of DIC and DFI took place as well from associate to subsidiary as a result of the cross holdings, there was also what is referred to as a step acquisition for that. So the PPA actually included the valuation of all of these entities. And the results reflected in the financial statements include both the bargain gain that arose as a result of the merger with OIFC, plus the impact of that reclassification of the IC-DFI. And hence, we appreciate that, yes, the note itself is quite confusing and could be vague for many people. And that was part of the struggle and part of the delay of the process of us issuing financials. Because of all of the cross holdings, it was quite a challenge to disentangle all of the aspects. However, if we look at the face of the P&L, it's on the parent, it's 3 million bargain. At a group level. Exactly. I think in the disclosure, just to avoid the double counting, they would have taken the 3 million from somewhere to add it somewhere else. But it's just a matter of presentation.
Okay, thank you very much. But to be honest with you, it's a bit confusing. Sorry to say that.
Please, no need to apologize.
Because the notes,
a whole bunch of qualified accountants took them months to actually crack the nuts. So, but we're happy to, we're happy to welcome you anytime, and then we'll, the finance could certainly walk you through it.
شكرا أخ علي, but to give others some time, جزاك الله خير, شكرا. Very good, valid points, and we are happy to hear this. If there is something that's not clear, we are more than welcome to pass by any time or to call our own investors.
جزاكم الله خير, مشكورين. أحسنتم.
So we have Shaur from Vision Capital.
Yes, hello. Good morning. Good afternoon. Thank you for the presentation. I'd like to begin my question with there is a line item of other losses in the standalone income statement for 2025. The amount is close to 6 million. Is this the same that you are referring to, the merger thing with YFC? There's a 6 million other losses.
That's in the accounts, correct? Not in the financial statements. The financial.
Yes, it's in the income statement.
That has to be this is on the reclassification. No, this is everything else on the everything. So the measurement and the net effect. This is the net impact of the PPA on standalone.
All right, so this is not something that is that will be there in the next years. This is a one-off.
No, this is a one-time. The entire line item is a one-time. So 3 million at a group level and 6 million at negative at a standalone level is all because of the net of the remeasurement and step-up gain loss, as well as the bargain gain on this transaction. So next year this won't be there.
again, Shaur, the exercise took very, very long time. And we have two tier one consultants. One of them is our own external auditor, and the other one is Deloitte to help us in the PPA exercise, and also our own team. And these are, uh, honestly speaking, to the size of the consolidation, to see as a small problem. It's not a problem, it's an adjustment. This adjustment, I don't think will appear anymore next year, whether it is a gain or and we are now in a much position to have a better comparison 2026, 2000, at least started with 2025. Thank you very much. Any other question?
Yeah, but just
Yes.
to add, sure, just to add in this, that once I think in XBRL, because of the limited line items available, many times it's difficult to present. But I think once we publish a full annual report and the regular PDF, in the regular PDF financials, I think this will be more clear. Here, what is happening is that as there are limited fields available, some items are clubbed, and hence it becomes difficult on the face of P&L and balance sheet. But in the regular, I think so, the PDF, once I think so will upload it will be much clearer.
On our website.
Publish in the newspapers.
Yes. Okay, next.
Great, great. Thank you. My next question is regarding your investment book. As you mentioned in the presentation, that there is some some changes or reorganization of the portfolio that you guys will be going through from MSX Company, that you are actually selling some of the shares, and there's some. What exactly is your view on the market, on the local market, first of all? Because as we have seen that during the recent months, the market has actually gone up significantly, and the valuations are a bit stretched. So what your reorganization would be towards? Is the question, and your view on the market, of course, being
I'll
the
let
professional.
the investment team to for but few words. At least we are having a very good assets. If you look into the majority of our own balance sheet, represent the two banks, the insurance and the food. First of all, sector-wise, I think they are diversified well. Company-wise, I think we are having good shares in the market, and you can see the appreciation of the prices. Recently, there are also others, many others to be looked at. And when we say to re-engineer or reorganize, we are having, as you can see in the presentation, nine associates, nine subsidiaries, seven associates. This is where I'm aiming to, and to see if we can liquid little, partially, or some or more. This is a decision that would be studied carefully, would be compared carefully, and we will have also our own board and then our own shareholders and the market aware if there is any substantial or material move to the future. But now we are in I would say, a quite comfortable position where we are not under any circumstances forced to do any sales or whatever. The banks are open. They are ready to support us if we want to have any further, for example, borrowing for a good purpose. Maybe the investment team can comment more if you want.
Thank you, Shahraz. I'll just elaborate a little bit on what we mean when we mention reorganization. Reorganization is not, it does not necessarily mean just a simple dump of shares on the market or something as drastic as that. It also implies reorganization internally in terms of organizing investments into certain more manageable kind of arrangements. So that's what meant by reorganization. You are right. I mean, I'm aware that brokers and the country follow each company's activities, and they know exactly when we sell. You're right. The market has shown tremendous increase as of mid of Feb. It's still holding up, which is we're quite pleased to see that. And to be very honest with you, it was a bit irresistible we didn't resist taking some profits where we could, right? So we have been quite inactive when it comes to trading over the past few years. We took this opportunity to book some profits on certain investments that we feel are fairly priced, and so we did exit some of them to a very minor extent. Moving forward, it's something we've been talking about for a while, and hopefully 26 will see the launch of that. We do need to diversify internationally, I believe, not because we have a negative view on Oman at all, but as a risk mitigation strategy, as a matter of caution, we feel that we need to gain exposure into other markets, and that's also eventually we're moving ahead with, hopefully very soon. As far as our views on the Muscat market are concerned, We're very pleased, obviously, along with everyone else, to see the massive increase, 50% plus. Some of our investments have gone up even more than that. We have to see. We have to see. I think the fundamentals are good. However, in the past, I've always felt that Muscat is a dividend-driven market, and so a lot of the assets were gauged by a dividend yield metric, which is not obviously the most applicable metric everywhere. It seems that we've moved beyond that right now, so now it's more of a growth-oriented kind of approach. Whether we revert to a focus on dividends is yet to be seen. If we do revert to that, the market will have to adjust. As obviously all fields come down.
What about the stock we have sold? It will not affect the classification of.
Yeah, I mean, as I said, with the stocks we sold, guys, in terms, I mean, yes, we did sell a few banking shares. They have no impact on the classification of the banks in our books. They remain, as far as the FAR and Sahar are concerned, they remain associates. Other than that, we've sold some non-strategic or non-core investments where we feel that we got the return we were looking for. So we're happy for the buyers to get their own return as well. We're not as greedy as that.
Great, great. That's good. Thank you for the explanation. My next question is regarding your investment securities book. Now, on the parent level, you guys have a sizable investment in that, close to 35 million, as at December end. Would you be able to briefly shed some light on what sectors are these investments in, and how have these been performing?
It's the majority. I mean, this investment book, I mean, it's not all publicly traded, but the bulk of it is. To be very frank, the bulk, in terms of sector-wise, banking is the bulky sector in there. That probably accounts for close to 70 or 80% of that portfolio. We also have a logistics entity in there that also that almost makes up the difference in value. Other than that, we have a few shares here and there, a lot of which have been liquidated over this past maybe 6-week period.
Okay, great, great. Thank you. My next question is regarding the payout, as was also mentioned by another participant, that you guys have issued a 60% bond now. If we were to calculate the cash flow impact, I mean, this is great for the shareholders. I mean, this is a very huge payout, but the cash flow impact would be a big one for the company, because it's, if I'm not wrong, it's a 4% coupon paying perpetual bond, assuming that it is being called in 5 years. That's 1 million reals hit every year. And would you also be able to elaborate if this expense is tax deductible or not? And after the 5 year period, the redemption would cost you around 25 million, and in addition to the 1 million every year.
Yes.
So,
It will be tax deductible as income. This will be a publicly traded instrument.
Yes.
As far as our ability to absorb, yes, I mean, we've got the pricing came about as a result of a backward working based on our ability to service it rather than the other way around. And so there is a variance in terms
Opportunity cost.
of what coupon we're promising and what the yield in the market could have been. It is callable in 5 years. Obviously, the call is at our discretion. The current cash flow projections, tell us that we're very likely to call it, but obviously things are subject to change over 5 years. So the intention certainly is to call it, as most perpetual issuers like to do. But that option remains at our discretion at that point of time. Listen, I mean, we wanted to reward shareholders. We wanted to make sure shareholders get something out of the company. The current period for basic dividend cash payment is what our cash flows allow us to absorb, and that is being paid. Balance is being given in the form of a perpetual bond. Once it rejigs our capital structure on the books, so our WACC should hopefully improve as a result of this, and that should have a positive impact on our share valuation. It also, I believe, gives our shareholders the flexibility to generate some liquidity without actually having to sell shares. So we know that there are certain shareholders who hold share very dear to their hearts. And so if they want to get some liquidity, they have the option of doing that by trading the bond itself. And so we feel that that was a nice middle ground to allow our shareholders to benefit while at the same time not putting too much of a strain on our own cash flows. And down the line over the next 5 years, if the cash flows improve significantly, then the dividend payout itself will improve, and the coupon will continue to be soft.
great, great. Yes, 100% we agree with the cash flows that this company should be able to generate, would be in a very comfortable position to pay this out. I'm sorry, I didn't quite get you on the tax deductible part. Would the interest on these perpetual bonds, interest expense for the company, would this be a tax deductible
Yeah,
line
it's
item?
actually
Yes, the CFO is and finance team say it is, so I will go by their word.
Okay, perfect. And probably my last question is this sort of payout. This is obviously a huge payout for the shareholders, and based on your cash flow projections and everything, this is not something that we should be expecting the company to, to pay every year. This is as you mentioned, this is a probably a one-time reward to the shareholders, and this is not something that should be considered to be a
I,
norm.
I think the decision will be based on the performance and will be based on our own abilities to meet our own obligation first, because we have priorities. We have our own lenders, and we have our own shareholders, and we have also our own future growth. And therefore, we are very much careful and aware of how much and when and how to compensate our own shareholders. Cash issue is an issue everywhere, and we have our own very clear plans on how to meet such like the bond, such the bond, whether the coupon or the if we decided to liquid. And also we are hopefully to see at least we are giving away cash dividend every year. Hopefully, we are now in a much comfortable position, either from profit collection from associate or our own business, or also from abilities to liquid some of our own assets if we required after monetizing them for a period of time, where we can generate good revenues out of this, and that can go back to the shareholders if we decide to do this. I'm sure our shareholders also will understand if there is any circumstance that is beyond our own abilities, or any force majeure, or any issues, but in the economy domain, or in the geopolitical domain, there are other things that probably sometimes change plans, but we are committed to give the best of our own business to our own shareholders in the future.
And we would refer you to our dividend policy that was recently announced. Obviously, as many companies would say, our intention is to pay a cash dividend every year.
Yes.
The perpetual obviously is not an every year event. We expect it to be a one-time event unless something significantly changes. But in terms of cash payments, yes, our intention obviously is to continue to pay a dividend to shareholders, hopefully at a growing rate. However, that depends on the liquidity and the situation at every, let's say, every financial year or dividend date. Yeah.
Yes.
Great.
Okay.
Thank you. Thank you. Just one more thing, that the treasury shares, they are not eligible for this cash and for the bonds. Is that correct?
Well, obviously, yes, for a dividend distribution, no, because, we own them, so we wouldn't pay for ourselves. For the bond, similar issue, right? I mean, we will issue a bond.
Correct. It will come back.
Yeah, I mean, in effect, it won't have an impact on company cash flow because the cash is coming back. So on the dividends, of course, yes, Treasury don't get the dividend. On the bond, no, a bond will be issued against Treasury shares. I'm talking about the parent Treasury here, not the subsidiary Treasury. Yeah, so the shares held by subsidiary classified as Treasury in consolidation. So the parent Treasury, a bond will be issued to that, but basically it comes to the company itself, and the coupon comes back to the
net.
So net impact, there is no net impact on the cash flows as a result of that.
Thank you. Thank you. And finally, being obviously the investment professionals for you guys, what are your views on the local market? How do you see the market going forward from the point that it is here and now on?
As I said, I mean, we're generally speaking quite bullish and positive about the Oman market. I think recent events have also shown how resilient and how unique Oman is in the region. And I think that interest will only increase. And, I tend to gauge a lot of that by the real estate activity. And if you look at that, it's quite at a very impressive pace. However, when it comes to the capital market, the stock market particularly, as I said, in the past, it was always my observation that stock prices on MSX have been driven by dividend yield, which I mean, if that's the way people look at it, then that doesn't leave too much room for growth investment, and that holds shares back. The current environment, at least over the past, I would say, month and a half, has shown, or at least has begun to show, that attitude is changing, where people are looking more on growth than at the dividend yield component. If they continue to view things that way, I think the market will continue to, if not grow significantly, obviously it can't continue growing at this pace, but I think those gains could be maintained. However, if the majority of investors in the market go back to using dividend yield and dividend cash flow as their main gauge of desire for shares, then that will put downward pressure on prices because companies forced to pay a dividend obviously have little left over for reinvestment. So we're excited, we're happy, but very cautiously because we've only seen this for the past few weeks. If the situation continues for us, for another month or two, then I think we could all be quite positive on Oman moving forward.
In addition to this, I think the aim to get MSX into the emerging market would still give us a certain growth, and we expect also to see the investors seeing Oman as a potential market, especially that it was proven during this bad few weeks recently that Oman market is stable. Our own political position is quite good. Our own economy is still holding together. Hopefully, this issue will be solved soon. We have all a belief that there is still a room for good business to be done, and but that does not mean we shouldn't look into other benefits that could add value to our own shareholders without compromising on our own presence in the Omani market. We see things moving, inshallah, in a good way, hopefully.
Inshallah. Thank you for the answer, sir. Thank you.
Thank you.
Thank you.
We are done. 1 hour. We have maybe 1 or 2 minutes if there is anything quick. Otherwise, I would like to thank everybody. Thank you, Mr. Ali and Mr. Shawar, for your own valid questions, and thanks to the team for being prepared. And we have been trying to be very, very transparent, and we will remain transparent and very close to our own shareholders and to the regulators. I wish you all the best and have a nice weekend. يلا مشكورين.
Thank you.
شكرا جزيلا.
Thank you.
Thank you.
Still have few minutes.